ETF per se is one of the most attractive products in the developed financial markets. In India, it is becoming very popular. It has the advantage of both the equity and the mutual fund. You can trade it like a equity, and you can have the security and risk management and stability like a mutual fund. Give you some sense, in developed markets such as US, almost 40% of the daily traded volumes is in ETF. Top 15 scripts, if you pick up on any day, more than 10 will be of ETF products. And this is most retail friendly products in the equity market. So Government of India has supported an FFO of the CPSE ETF, which was launched in 2013-14 to the tune of 6,000 crore. 4,500 crore is the basic size and 1,500 in the green shoe option.
Help us understand, sir, why an FFO for a CPSE ETF, and why did we not launch a separate ETF, so to say? Why did we look for a further fund option for the existing product that's already there in the market?
The existing product has been tested in the market, and if you see that it is given a CGAR of 14.4%, which is as compared to Nifty CGR for the comparable period of 8.9%, very attractive. The product itself is very attractive. If you see even the dividend, it is giving a dividend of 4.07% since inception, as compared to 1.89% of Nifty. So issue is increase the AUM in a very attractive product which is already in the market. Larger is the AUM, more attractive it is for the institutions and investors to invest further, so that they can trade at whatever volumes they want to trade in the market.
There's also going to be a lot of priority focus that will be given to the retail participation and also pension funds. Help us understand, have any pension funds approached the Government of India so far on this CPSE ETF, and what kind of promises that they've made with respect to investment? And what all steps are we taking going forward from here with respect to increasing retail participation in the capital markets?
Well, the Government of India has always given preference to retail participation in all the OFS offerings or disinvestment offerings. Keeping the same principle, we are giving priority in allotment to retail investors. This product per se is very attractive for retail investments and even pension fund who want to take a medium and long term position. Why? It's very simple. If you have a basket of 10 products, which are all good blue chip companies, the risk is dispersed and you have much less volatility and you have stable returns. This is a type of product which retail and pension funds looks for. So this is a product which is very attractive for retail, and I have given you the figures for CGR of 14.4%. It's very, it's exceptionally good products. And this is one of the ways we are partnering common investor into the success story of the CPSEs.
Absolutely. Also help us understand the stocks in this CPSE ETF are, of a wide range, right from oil to coal. Going forward from here, will we see more products like this in the market? Like, will we see more ETFs that the government will look at floating?
See, it is more important that the ETF should sustain and improve in size. Larger are the products in terms of the volume they can offer for an investor. We can attract larger investor. If you see in India, pension funds from other countries, they come in very few scripts or in very few products, mainly because of the size and the trade volume every day. So it is better to strengthen a product if it has attraction. But the Government of India will definitely come out with more such products to give a different flavor of offering, a different segment of offering, and we are working on that.
How soon could we expect any announcement on it?
To give you a sense, the current CPSE ETF even today has an AUM of almost 2,000 crores. Another 6,000 being added to it, it will be 8,000 crore single ETF product. This will be one of the very impressive size. And I am sure you can expect a new ETF also pretty soon. but they will definitely be having different type of contour and offerings and structure as compared to the present ETF. Both will not compete, but both will supplement each other.
You know, the last 2 months we saw a lot of volatility in the market. And do you think that has been one of the reasons why we saw a CPSE ETF by the government? Probably because OFS was not a rather feasible option?
Volatility is always in the market. Sometimes more, sometimes it is less. But ETF definitely offers you much less volatility. As compared to Nifty, the volatility index for since inception had been 0.75. So it is not only stable return but less volatility, and that is what it makes it more attractive. But timing, I personally feel, yes, this can be one of the reasons. But ETF was matured and it was attractive. Upside is there in all the scripts, all the 10 scripts. You can expect a much better return on this ETF. It is very attractive at this point of time. That's why we have launched.
Also help us understand, sir, by after this ETF, the government will be close to achieving, over 30,000 crore rupees in divestment proceeds so far, but we're still short of the divestment target a little bit. I know you have 2 more months pending, so there will be things that may come out. But at this point of time, given the fact that revenue receipts are pretty high, is there any sort of a pressure with respect to divestment proceeds, or is the government in a comfortable spot?
I will not be very competent to answer this question, but I can tell you that a target is given to the department. It is best endeavor of the department to achieve that target. But we keep track of all the resources and requirements of the government. But we are working on that. If the market is good, we will prudently disinvest.
I know you have 2 more months pending. Will we see more OFSs, or will we see more, what kind of products could we see in the market that the divestment department would look at?
Divestment departments or Department of Investment Management looks into all the possible options which SEBI has given to me. And whatever is best in a given situation, we exercise that.
The Department of Investment and Public Asset Management is also looking at dividends of all PSUs. You had come out with guidelines for dividends at the beginning of the fiscal. You've had a meeting with the PSUs. How are things really looking like now at this point of time?
The whole idea of having a comprehensive policy of investment management was to really focus the attention of financial managers in the CPSEs to look into the comprehensive nature of the interlinked issues. And it is paying dividend to us. It is the first year of implementation. But our meetings with the CPSEs has really been very fruitful. They have appreciated the concern of the government, and they have also understood how best to manage their investment to give best market capitalization and a return to the investors.
So there are reports that certain oil companies will be asked to shell out slightly more as compared to what was initially, carved out for them in terms of dividend. Will we see, if you could give us more clarity on that, basically?
There are standard principles on which we have to see whether the dividend is adequate or not. There is nothing like good dividend or bad dividend. In a given situation, a dividend has to be declared, and companies have a sense of discipline and a guideline now to fall back and see whether the dividend is sufficient or adequate.
Are there companies that have sought any sort of exemption as well?
And definitely, many of them have come, and we have examined them on merits.
Right. My last question, the government is also creating a pipeline of sorts for strategic stake sales. Will we see any strategic stake sale being completed in this fiscal? And where are things with respect to next year? Because, we've seen a cabinet approval being given on strategic stake sales. How soon can we see the ball rolling with respect to strategic stake sales?
Well, in view of the in-principle decisions, whatever further decisions will be taken by the government, they will be in the public domain.
Will we see ITDC Hotel, one of the ITDC hotels, being hived off in this fiscal? Because a lot of work has already been done on that.
Yeah, there is progress, and whatever will mature will come to you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.